the children of planet Earth. Hello from the children of planet Earth, Hello from the children of planet
What's up, everybody? Good morning. Welcome to the stream. If you missed out yesterday's Zoom call, we gave an awesome tour of the new marketplace, the new data feeds, all these great, awesome things coming to your Rocket Tutor experience. Don't worry, we'll do it again. You didn't miss out, but come to the next one. Good morning, Joshua, Alexander, Steve, Rang Bulls, what's up? Alex. I am Ira Berry. What's up, what's up? What's up, everybody? Hold on. I'll just make sure I'm having a good hair day. I dig my like a chill pool, swimming pool, ambient house lounge style, music. Like every morning I start the stream, I feel like I'm sipping a martini at a pool in Vegas. You know what I'm saying? Let's get rolling. Where's the good music here? The cool lo-fis. Let's go. All right, everybody, let's take a look. We had some news this morning. You know it's serious when I have my glasses on. I'm gonna read something. Let's go. We have earnings. All the non-farm stuff. Participation rate. Read those in a little bit here, a little second. Payment rate. Just kind of taking a look. On the surface. DD bands are broken, so it's a cautious trading day already. It's a red trading day. It's a red in a sense of our lights will be turned red if you're outside of these bands. You know me, I don't trade too much out of it. Well, let's get VIX on here. Just make sure that we're still in that tight pivots range. We have this rule that we do every single morning. Welcome, everybody. Don't forget to hit that thumbs up button on the stream, my friends. Appreciate that. Scroll down below and just give it a little click. Subscribe to the channel if you haven't already. We're live every single morning. I love you. Trading, story time, market talk. We got it all. Okay. We are above triple B, so overshooting pivots. We can kind of play around there for a little bit. The non-farm is having us retrace a lot of that information. So VIX is above triple B, warning sign number 1. Non-farm, create a DD band break, warning sign number 2. So just kind of remember these warnings. I'll write them over here. VIX above would be. All right. We start in a couple of minutes here. Whoops. Okay. 1 minute actually. Okay. We'll talk about the data in a second. We'll just slight miss on unemployment. So already we have irrational alerts already to start the day off. Just keep that in mind. All right, market's opening really quick. Get this up. Okay, let's take a look what we have right out the door. Resilience being positive and negative is kind of what we look for. The S&P is already. Wait a minute. Okay, hold on 1 second. There's QQQ and SPY. Oh, we are already near the open. That's right, because the market moved after hours on earnings. That's why that's doing that. Okay. All right. First read, we have VIX below there. All right. Okay. S&P hedge break. Oh, this is moving quick. Okay. Where's music? Oh. Is there a Zoom recording of the walkthrough yesterday? There is not. We'll just do it live. We'll just have a couple of them just to intro the marketplace and stuff. There's a Zoom recording of yesterday's session though. The trade plan and stuff. Cheers. Every morning, sip my Celsius. I babysit these, you know, high blood pressure and all. You guys like to watch out for my health. I have switched over to coffee. I don't take any more stimulants. Gonna be a good boy these days. All right, resilience is positive. Nasdaq resilience is positive. We're coming back on. Let's go ahead and get ourselves a possible entry here. Wait, QQQ hedge break downside. Hold up. Wait. Before I do anything. Oh hell. Okay, we are okay here. QQQ hedge break. S&P hedge break. Okay, so resilience can apply hedge pressure breaks, and hedge pressure is inside the box. I'm going to keep a very close eye on the resilience number. Positive's going to flux up, negative's going to flux down. Market is trying to hold DD band for shits and giggles. Let's play it. Just right at the bottom of the box. For it's a tight trade. I'm gonna bet that we hold. Let's do 3s on the entry. What was last night's overnight dynamics? Let me check really quick. Make sure you find that like 49.24, 49.34. Did I mark them? Oh, 24 and 34. Okay, let me just do that. 24, balloon, 34. We notice that they also can show some pivoting action as well. All right, this would be long, at least to retrace downside red lines. Okay. Resilience is right on the edge. You're trying to make it. Monthly hedge risk on QQQ would completely collapse the market. What do we think, y'all? Let's just take it. I'm going to be on a half position normal, what I normally do. We are fighting DD ban for both of these. So let's talk about some retracements here. Let's go ahead and do a red line really quick. Little quickie technique here. Small long, yeah, I'm saying. Where's that music at? Oh, your tab just crashed. Like when the tab crashes, I'm gonna watch the ad again for the video. All right, you guys, hold on, give me 1 second. I know don't wait for me to say something. The Thinkorswim's doing its song and dance. I like to call it the Thinkorswim shimmy. As it's loading up all this data. Here's some just go as slow as you can, Thinkorswim. I like drawing it. Oh. This is this morning. Okay, let's just double check that there's any red lines or anything. Where's that volatility right there? Okay, perfect. Let me retrace. We missed it by a tick. Okay. There's the music. See, I've always wondered why Thinkorswim has done this. It like flips. It's like auto scaling, and it's trying to go. It's going back and forth. It's like dancing around. It's like this is why we're like Rocket Scooter. We're like, okay, let's make a platform that hopefully is more modern. I don't know. We can maybe get something that's a little slightly better. Maybe excited. Okay, so let's kind of mark that up. Yesterday's move. Let's mark this up as well. Again, we gotta go through the shimmy. How we doing on the trade? Looks like we're here and here. 50 bucks profit. Keep an eye on resiliences are flipping negative. So we are irrational though. So it's going to be plus or minus 10. That's going to kind of give me that scare. I think I'm going to stay committed to the trade, but again, I don't have much risk on the table. Remember the committed to the trade video. Okay, there it is. I already see it. If you guys have taken our courses, you'll know exactly what it is I'm looking for. If you saw what I saw, you know exactly what it is I'm looking for. And it's very easy to do this. Watch, I'm gonna shake some cool tricks. How's the trade doing? Still positive, good, still making the money. If it was like not dancing around with the data, it would be like my favorite thing in the world. I think if someone just would like stop like dancing around. There we go. And then there's that downside red line right there. Okay, so let's mark them. So these are called illiquidity pivots. So we're looking for these to be pivoting action today. I hope you guys don't mind giving that a thumbs up on the stream. We love you. Thanks for tuning in. Currently long in a trade. Low volatility on non-farm payrolls. We're long to retrace this downside move where I'm drawing right here. That red line I just drew is my upper target, at least for minimum. Keep an eye on resilience is still negative while we're going higher. What I don't like about this is I want to see resilience starting to move positive. And this is going to sound kind of wimpy. But let's go ahead and take the $200 profit and let that settle out before I get out of there. I did take profit, $200. Better safe than sorry. Let's let resilience stabilize just a little bit. All the cautions are to the downside, so let's be careful. I did want to stay committed to the trade, but I think that I want to let it play around just a little bit more. I want to see something a little better than what I saw. The small count challenge is almost what we started at 5,000. It's almost what at 12,000. So it's over 140%. This will be the account I used the Robbins Cup. So if you imagine 140%, I'd be in first place. So I'm competing. With you tuning in, I plan on winning the Robbins Cup. It's gonna be a tight squeeze though. Good traders up there. But I'm very competitive and I will be playing to win. But it'd be fun just to play. Okay, what we know about resilience, let's be careful. Ready? Now, again, irrational, or actually, no, it is rational right now. Minus 7.6. Res less than 0 is starting a hedge pressure break. We know this. Res less than 0. Those are going triple Bs. So, overshooting pivots. Let me try this again one more time. That's another condition we have today. If I were to take a guess, over here. Resilience is a telltale sign of what you're experiencing today. Everybody understand? We're going to go back down to this box. So I took profit early. It's a warning sign. God, I'm so fucking good. Look at that red candle. Look at that red candle. Oh my God. Oh my God. Oh my God. Connor took his $125 and the S&P took a little dip. No, but stream over, guys. I'm sorry. I just can't anymore. In the middle of the damn sentence. Careful. That resilience does not mean collapse or crash. Trying to break hedge pressure to the upside. We make sure we opened. Do we open? Hold on. We get too happy. Oh, so we gapped up. Okay. So yeah, likely to fill the gap to the downside. Back to where we were. I love when I'm in the middle of a sentence. The market's just like, oh yeah, that's right. Matt was saying this. Let's get back to where we wanted to go. Careful. Resilience is deteriorating. The market's likely to fill the gap. Resilience, the gap fill predictor, is showing the arbitrage in the S&P through the what we call the redistribution zone, which is the space between yesterday's close and today's open. The stocks themselves are fluxing back to meet their close price. The ones that gapped after trading back off. The S&P, while it is sort of squeezing higher, the stocks themselves are starting to squeeze lower. This is where other indicators out there that are like momentum based and stuff are pointing upwards. Resilience is clearly pointing downward. Market cap weighted. Let me show you also. Let me show something. Again, it can still rally. Don't get me wrong. But you see how like that downward pressure is what we're seeing. Is what the market is trying, the S&P is trying to connect with its destiny of the stock. Now, if the stocks recover and go above 0, then that's a good sign. Now, again, I'm not going to buy into this. It feels like a bull trap, so be careful on this one.
show you something. Let me show you some indicators. And let me show you something. This is called NYSE tick, right? So there's there's some jealous weirdo online who watches my stream every day. And he goes, I feel like resilience is like totally like tick, and you copy the code. And I'm like, okay, I'll bite. Let's go ahead and look. This thing is pointing up, and it's going to teach. Here's what tick is doing, right? I think it's pointing up, and the resilience is clearly pointing down. They're going different directions. They are 100% dissimilar in their coding. This thing is just following the price. Price go up, this thing goes up. This thing goes up, resilience is going down. Watch the difference. Watch the predictability of this. Just watch. Listen, I want to, and you can clip this video because I'm going to show you. I've got my crystal ball out. Watch this. Watch this video. Watch what this does. Okay, watch this thing. It's like, look at this bull market, guys. Bull. Let's buy. Woo, going up. Market's going up. Price is going up. Indicators going up. They look the same. They're exactly the same. Wait, but the rocket scooter guy, their indicators are going down the entire time. Wait, hold on. Resilience. Careful. This is what this one says. Careful. Bull trap. Be careful. They're putting opposite directions. Literally opposite directions. So I took a long and closed it. Resilience is giving me a skirt, making me scared. Making me scared of the market. Tick, boom. Markets, these are the number of stocks ticking up. Resilience is saying, not good enough. Watch out. Now, I did close out on the bump. I'd say went to watch out because the signs are not. Now again, market day already ended when you hit DD band and you had float failure today. Remember, this is random anyways. Market is going to behave randomly. There's that red line we were talking about. So the idea is that the two are absolutely dissimilar to each other. That's the point I'm trying to make. I don't like to trade on the long side outside of this box. This being like this, again, I'm just cautioning myself. Until that number, sorry, I'm eating my breakfast here. Until that number is above 0. Anything above the box, the S&P is stretching away from the flux of the market cap. The S&P is either the stocks are going to rush to meet the S&P, or the S&P is going to sell off really quick to meet the stocks. So this number right here, again, we've already had a float failure, so we take our numbers with a grain of salt. Nasdaq is starting to save things, but S&P is not. I do a hedge break. Be careful here. Is that it's very possible that it can snap back down. So I take a caution on the trade. We have news coming out as well. DD's pulling back slightly, a little bit slightly. It's still above, it's still bullish enough, but it's pulling back slightly. But you can see that there's some indicators that just mirror price action. And resilience clearly does nothing similar. They point in opposite directions. This is showing you how these two indicators are different. So if you ever were wondering, I even discussed how the code works in resilience. Okay, so we have information coming out in a little bit. And we're waiting for the market to move on new data. 12 minutes, waiting for the 12 minutes. This is showing that while we do have a slight little bit of retracement to the level I'm looking for, it's that red line right here. This was that target I drew this morning. We teach you these red line techniques. This is that pivot. We still have the cautions right here. Look at this. Look at the difference right here. Right. Something is going on right here, while the S&P is still ticking higher, resilience is an early warning sign. It's actually minus 16. Watch this very quickly, okay? Not that I'm going to short it, but this is hinting. This is a bull trap meter. This is what our stuff is really good at doing. I'd rather miss out than be stuck in a bull trap. Are you guys ready? You ready to see a couple things happen? In my very strong opinion, the risk is too high that this immediately starts selling off and becoming volatile. So be very careful today. Right? Watch resilience. I've been saying this all morning. It could very well do this. Now, it doesn't mean I'm going to short it. It's a caution. 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 While the basic indicators are ticking up, this even found higher highs. Res is still showing that caution. You got to be careful when you have to watch this one here. So I made like 200 or 300, I don't remember, 200 or 300 bucks. I closed it out. It wasn't much. Once it started popping, I just got out of the way. You can see that this is an arbitrage thing. The S&P is designed to track, the SPY is designed to track the SPX, which is tracking the stocks and the index. And this is telling that the stocks themselves are not gapping and going. The majority of the market cap is flexing back to the downside. So we have the ability to actually see that. It's kind of nice. And then now after res is going negative, this one finally caught up. So just going to show you the difference between like an indicator that's just based on price action, indicator that has predictive technique. I don't know, guys, you guys can clip this because this is the proof, right? If you guys want to clip this and post this, I say it, it happens. Like I say it, it happens. Like I literally draw the word caution, it happens. I love doing this on stream. Do I start the Robins Cup next week? Yeah, they're still working on getting my account open. So there's one final step to get the approval. I don't know, guys. Did this prove to you? Does this prove something to you? I mean, I literally drew it while the candles were green. I've been saying bull trap all morning. We talk about, so the idea is that like there's two different types of people in this world. There's people that make something that does something and that does what they say they're going to do. They could draw it perhaps. And there's other people that don't like that and wonder why their YouTube channels don't grow after a decade. And then just kind of make up shit because they're mad. But I'd be mad too if I couldn't make anything like this. I sat in someone's shadow. Pretty gangsta. I wish I had a mic to drop, but all I have are like my old glasses to drop. And it's weird because when I have my old glasses, they look just like my new glasses. So, you know, I've got like layers of glasses, but I can drop them. Well, I don't want to. You mind if I don't drop them because they're like my backups? I will gently set my glasses down, and that would be like a mic drop. Is this good enough? Oh my goodness. So again, we could watch resilience here. Just one pointing up, one pointing down, and I think the big troll was like, it looks like they're the same, man. And I'm like, I don't know. I literally tell you guys the code and how resilience works. It's a flux equation. The net sum of market cap of stocks fluxing to their redistribution zone, top versus the market cap flux to the bottom, and there's a sensitivity transform that allows the market to be, the equation to be more sensitive in the middle and less sensitive on the edges. You have a nice mic, don't drop it. Most streamers don't. Brilliant. Be long, probably because trade the bond. I mean, like, it's just, you guys can take screenshots at least you want. Like this one's starting to trade higher right here, and resilience is actually finding lower lows. So I love this, right? But this is why, I don't know, this is why we had 5,500 user accounts in our first year. People are like kind of looking for something new and different. But we really love you guys that y'all like support the idea that we put mathematics behind our real. I mean, this is just simply explaining the fact that the S&P stocks move, the S&P moves. Stocks move, the S&P moves. But the S&P can trade on its, the SPY can trade on its own, so it's still trying to chase. And I can do this, like, it's still trying to chase, but it can kind of like be trading on its own, but it's still going to kind of like, eventually they're going to catch up with each other, right? That's the point. It's called, you know, arbitrage type trading. And so the idea that the S&P can detach because it has its own supply and demand, when that supply and demand is exhausted, it's going to want to meet its destiny to price accurately according to the market cap weight of some of the stocks, right? And so, let's be more accurate of the size of this. So caution resilience is more like to fill the box. That's where that's supposed to be, right there. And I drew that based on the cheat sheet. So all the members here, you guys get these cheat sheets, right? Resilience talks about that same effect. Anytime the stocks are filling their gaps to the redistribution zone, you're going to see that the S&P is likely to just turn around and turn about face. So like, this is the whole point of why we build what we build. I mean, we're actually engineers with engineering degrees. Bing! That also says honors up there. It means I was extra nerdy. And that's probably why I have 2 pairs of glasses. And so this does not make me see any better, but we do our homework here. And I just want you guys to, I look like a younger Harry Carey. Oh my God. No, funny. Okay. What you guys are saying, that's funny. Well, there could be a good trade. Just let things stabilize a little bit, right? We got the old ticker. This little indicator here, bull trap, and got you in the bull trap at the top. Now again, it only fell 10 points. It's not like a, you know, massive turnaround and collapse here, but I mean, obviously, you know, start the stream, drew this pivot beforehand. I drew this pivot, and there's the pivot it hit. This indicator telling you highs, trading up here, trading up right here. I was like right here and good now. You got to watch resilience. Resilience ticked down, as you saw. 1, 2, 3 low lows, and I said caution. I drew a line from here to here. Again, caution. This is likely to try to attempt to retrace this, and the news coming out 5 minutes. Let's be careful on this. It's still signaling caution. The destiny of this is to fill the gap to the downside. It doesn't mean I'm shorting though, because there's still a greater bull market. Yesterday's video talks about I don't short in a greater bull market unless it's off of something for a reason. There's nothing to short off of here. I took a long on the break to the upside, but I took profit very quickly. Yeah. Oh, you remember watching that stream where I said, yeah, I gave out the equation. Oh yeah, no, I know, I remember that stream, boss. That's so funny. I used to trade with my account number because I tried to do everything right. That was that first trading challenge I did, the one where I did like 6,700 to, what was it? The last day I was streaming was like 95,000. This is what I went on that 75-day trading streak. You guys remember? Who was here for the 75-day streak? Every day was streamed live. 75 days without a single losing day. This is what, 20, was that 2020? 2020, 2021, that era? You guys remember that? During that challenge? Who was here for the 75-day streak era? Like, I didn't lose a trading day in 75 days. 75 trading days. You guys remember, say that I was there. Matt counted every single day. Every single stream title was day 25, day 26, day 27. Didn't I have a good run at the beginning of Q4? I think so. So Boz was there. This is like old school days. Now again, luck, skill, luck, call it whatever you want. That was fun. And back in the day, I was doing everything right to make sure, because when you get that big of a streak, the stream grew huge, and people were like, trolls come in, start calling shenanigans, and like, well, how do you know it's not paper? How do you know it's this? Everybody's like, Matt posts this statements, you know, like. So I was like, okay, let me put the account number on the screen. So I put the account number in the bottom right. The total P&L was on the right. I even drew a graph, or not drew a graph. I even took a screenshot of the P&L from Tradeovate every morning, and I'd cut and paste it right here. And so you would actually see the P&L performance from the previous, you know, run. So like from start till like every day. Just take a little screenshot of the graph to show how the account has changed over time since the start. And the account on my screen, and somebody was like, well, somebody said on the stream, you know, I could hack your account. So this was, I think somebody said something like that. It's like, you know, the same troll, a couple of trolls came in there. I could hack your account and make trades for you and call your broker and pretend I'm huge because you have your account number on the screen. And what would you do about it? I can mess up your challenge. Somebody said, you get, Boz is remembering that, right? Boz remembers exactly what it is. Some trolls, there's a troll used to come in the stream and like advertise their crap and use fake accounts and stuff. And they were like, I could hack your account by calling your broker, or I could pretend I'm you and get them to close out your trades. And what would you do about that? Your account number's on the screen. And I said something like, I don't care if someone hacked my account. I'll just put in another 20K tomorrow. And then I'll do it again the next. I said something like that. And that's what Boz was talking about. Like, I would rather show my account statement. And then, yeah, that was what he's talking about. I was like, I'll just drop another 20K. That was my response to the person saying that they would hack my stuff. That was kind of funny. Well, I guess I was on a coffee high that morning. I was overly enthusiastic and energetic. Did I say I'm rich, bitch? And then say something like that? Oh my god. Younger Matt needs to be more modest. Okay, news coming out in a minute. 75 days. Day 76. That's 75 trading days. So when you count for weekends, that's 3.5 straight calendar months without a single red day. How? I'm very cautious when I trade. I'm really picky. Of those 75 days, I think about maybe 15 of them are sit out days. The rest of them are all trading days. Here we go. It's 9 o'clock. Data's coming out. Factor orders come in 0.2 and a 0.3 read. 0.2 read on a 0.3 estimate. The Michigan number is what I'm curious about. Consumer sentiment 79. It's a beat on the 78.8 estimate. Slight beat. Resilience is still negative. Again, I'm still cautioning this, and I don't know if I want to short from the red line. I very rarely short these markets in the greater bull zone. Now, red line is a pivot to short from, with resilience being negative and Nasdaq resilience being positive. There's clear index divergence. The light is red. When they are separated like this, we know that the Nasdaq stocks can pull the S&P stocks pretty quickly. So if this market is looking a little chaotic, you can understand that the entirety of the market's trying to sell off while the Metas and Amazons and Apples of the world are trying to push higher. So I'm going to stand still of what I want to do. But everybody here, let me just take a poll. If you can do on me really quick. I remember that troll one time, right? And tick and resilience are, there you go, they're the same, right? Are they the same? Are they anywhere close to looking the same? This one been trading up on, oh wait. It's, pull it. It's 31 minutes later and it's finally starting to trade lower. It finally caught up 31 minutes later to the sentiment of the action that's going on here. It's about time that this indicator and its 30-minute delay to finally show some downside. Well, I'm happy to see that. Do you think anything close to each other? Oh, I will drop a receipt from a liquor store. How about that? And that might be somewhat. Are they, guys? Are they anywhere close to being like at all alike? Resilience is the actual math equation. It's very, very complex under the hood. Can we all see the difference? Not at all. Like nowhere even close to being the same. Res has been pointing down the whole day. This little tick thing has been like trading up, and then finally it's starting to trade down. As a matter of fact, this weird thing right here, I would just say that this thing just looks exactly like the price. Isn't that weird? This thing looks like an M shape, and then Res has just been like, nope, we're in decline. They look absolutely nothing alike. So just kind of keep in mind that, you know, there's a difference between indicators that just kind of like very crudely trace and follow price action, and some that have a little more complexity that actually, I think that case has been proven. So let's just be careful here, right? It's like, no, none of there's RSIs, any of that stuff. They're all slightly like, even the RS, somebody was like, what was it like the RSI? You got the equation of how it works. I can walk you guys through it. Like RSI is showing upward momentum and, right. We have been showing, like, here's the big divergence. This is how you know that any price indicator that's based off of price action is going to be very much sensitive to price. Like the RSI and the higher highs has been trending up because price has been trending up. This entire, let me draw a kind of a tighter box here to here. Do you see how this just looks like price, like reiterated? But in that same window, this has been pointing down. This has been pointing up. This has been pointing up. This and this are exactly the same. So just letting you know that resilience is actually designed to have predictive tendencies. That's why when I was literally saying bull trap and I drew this line, this happened, right? We drew that red line pivot to show where it can pivot from. And then I drew that line before these red candles appeared and said caution res. Watch res has been circled in the morning. So the idea to have indicators that are tracking actual mechanical things in the market is important. To trader, this no offense, this stuff, this junk down here, is just showing you price. Again, there's no predictive ability here. This is telling you that the S&P is valuing itself higher than the flux of what the stocks are doing. So the flux of the stocks through this box here are showing that stocks that all the S&P did trade up to fill its gap and keep going. Stocks are filling their gap to the downside. Like it's like the stocks gapped up and immediately sold off. The S&P is likely to catch up. So the idea is that like resilience is explaining arbitrage, where there's a deviation between something current value and its implied value. Implied value of the SPY is the SPX that it's pegged to. The stocks and the SPX move in tandem because you can't trade the SPX. It's just a math equation. But SPY can trade higher and lower because it's its own instrument. So people can buy the SPY faster than they buy the stocks. People can sell the SPY while others are buying the stocks. But when the market gets quiet and there's no deviation, then they're going to get back in tandem and trade around. And resilience is exploiting those imbalances between open and close in the two different MOC, MOO process where people submit large orders to market makers, get filled at a single price, the open and close, and this big volume spike at the 9:30 and the 4 o'clock, like here, shows that there's a huge volume sink of traders here and traders here. Yesterday, if you look at the daily volume always looks like a J, like a little hook, something like that, like a fish hook. Open and close is always really high volume, and so open and close, whichever one it is, same thing. Open and close, always high volume. So if stocks are prices lowering to find buyers and prices raising to find sellers, and stocks themselves are inside their own little boxes like here, and the S&P has been squeezed higher on its own trading, and the stocks themselves are moving to the downside. So there's a huge stretch between the S&P's implied value, which would be somewhere in here, and its actual, and SPY's actual trading value. So there's a deviation. So one of two things is going to happen. Either A, the stocks are going to rush to rally to meet up with the S&P, or the S&P is going to collapse rapidly to meet the stocks. At some point, they're going to meet each other. Now, why don't I can either short the S&P or long the stocks. That's what resilience is telling me to do right now. So the two options is that the S&P, if I were to short the S&P and long the stocks at the same time, understanding that they're going to try to meet each other in the middle, that's a winning trade. So when resilience is negative, one could say, I'm going to short the S&P, or I'm going to long the stocks, or do both. If you do both, either this trades higher and the stocks trade higher with it, so the long trade goes up and your short trade loses. If they go together, both sides win. If they both crash, this one wins and this one loses. So that trade is balanced. So with resilience being negative, shorting the index and longing the stocks, your trade is balanced. If you balance it out, it's neutral. That's how that works. Now, Resilience tell me here would tell me I would not long the index and I would not short the stocks. Here's this, everyone grab a pen and write this down. And res is negative. At the same time, he had to choose no long index and short stock. If res is greater than 0, you're not going to short the index. Long stock. See what I said. If resilience is less than 0, the index is trying to match the stocks. So I want the index to go down. I want them to meet in the middle. So I would want to long the stocks and short the index. Resilience is greater than 0, then it means the stocks are trading higher than the index. So I'd want to long the index and short the stocks toward each other. I wouldn't do the arbitrage trade the other way. Do we all understand this? Because resilience is telling you the lead and lag between the stocks and the index against the stocks that are trading first. When it's negative, it means the stocks are pushing lower and the index is higher. So the stretch is going to collapse towards each other. The index is more likely to go this way and the stocks are more likely to go that way. So I wouldn't continue to short the stocks here because right now the stocks are probably selling off. They've already made their sale. So if I were to pull up like an Apple or something, he's probably selling off. I haven't even looked at it. Let's double check. It's kind of neutral. Let's look at Meta. Like if something was selling off, Meta's looking good. Amazon, not looking like great, but looking decent. Some other ones. There's an example. Ooh. Visa's trading lower. Let me short this. Well, let's think about it like this. The stocks are lower and the index is higher. It's more likely that the stocks move up and the index moves down to meet in the middle. Let's watch like Visa. It's a very heavy high market cap stock. They're likely to try to like rush to meet each other somewhere in the middle. Like Visa's fluxing to the bottom side of its box. It's a good example of things that are pulling resilience down. The S&P is likely to go lower and Visa is likely to go higher to meet. Now, again, this can continue to go lower, but I'm saying like I wouldn't be shorting a stock. I would not doing this, I wouldn't be shorting the stock and longing the index from here. I'd instead be taking the bet that they want to push towards each other. Do we all understand this? This is called arbitrage. Right? So it's a little more of an advanced technique. Now, if the S&P continues to go, then the stock is likely to hold. So my bet is that this is likely to go higher. At the same time, this is likely to go lower. Questions? Just drop the glasses. They're not the same. Oh yeah, they're not. Do my diligence and compare. They don't take long to figure out the variables to drive them completely different. We'll just go to show how powerful campaigns of misinformation can be. But that's what lawyers are for. This is very heavy penalties for stuff like that. All right, let's go. NQ. Oh, what am I trying to do? R2Y. You guys are so funny. Does risk ticket count weighted of the individual stocks? That's correct. Resilience is market cap weighted. It's actually a flux of the market, the total amount of market cap in the S&P. So each stock that's considered in the equation is weighted by its market cap to match what the S&P's weighting is. So like resilience is more sensitive to Apple than it is stock number 499, bottom. Another fake short in ES using resilience again. Another fake short. Yeah, so like I wouldn't be shorting this off of resilience. I just wouldn't be longing the index right now. Right. Now one could short off of that red line, which remember, if you guys remember that red line technique, fast forward to the very beginning of the video. This is the liquidity pivots is one of our most powerful techniques. It's likely to trade lower rather than higher. And so this is just kind of to show you guys the detail. That's why we try to create indicators that have that ability. It's exploiting tracking between these two things. And that's it's much stronger because it's repeatable. It's algorithmically tethered in its pricing. The SPY is pegged to the SPX, and it can fluctuate a little bit. But it's like when you're trading above this box, it's like caution. It could just immediately zap down to go lower. And that's exactly what the cheat sheet. I mean, even and somebody says rocket scooter is not for the sheeple, and thank you. It's really nice to hear. But even for the people that have, you know, less patience to learn the mathematics, we do create cartoons to make it easy to see with lines. And so it's a little bit easier to kind of understand graphically. This is the range we're looking at. Resilience bearish, less than 0. I've circled this here. I'm trading above this box. It's likely to collapse and get lower. Now, why don't I short it? It's just because in general, while it does want to go lower, the market is still too bullish for me to short. So now I'm stuck at a standstill. I don't short when DD is greater than half and we're trading above monthly edge pressure and monthly map is showing bullish nature of the market. Here's that Visa pushing higher while the S&P is trying to push lower. That's that kind of draw towards bringing them together. Doesn't mean the market's going to sell off. It just means I don't have any indication that from here it's going to continue to go long because the stocks themselves aren't moving higher. So what I'm going to do is I'm going to watch some of the stocks that are depressed and down here. And if Visa starts breaking above like this half gap and some of the other heavy ones do, then I'll go ahead and do that. So why did I pick Visa? So let me show you how to look at this. You're going to go to your scanner and find stocks that are below half gap in the S&P and NASDAQ. Let's just see what we have. Let's sort by that. It's in volume traded. So let's find like the big hitters today. Tesla also in the same boat. Let's watch Tesla instead of Visa and Google. Some of the bigger, more popular stocks. And there's those tick ups that we're looking for some of these stocks. You know, again, stocks like Tesla flexing down to the side of the box are what's creating some of this movement. So like I said, if I saw this, I wouldn't be shorting Tesla and longing the index. It's further stretching the two apart, right? At some point, they're going to connect. And it looks like right now the stocks are trying to connect to the index itself. So like I said, you can see that that's evident when you go through these resilience classes. Google is still outside of its box as well. Like I said, the stocks, this is where we're looking at the stocks are more likely to trade up to meet the index rather than continue to sell off. I wouldn't be shorting the stocks here. Remember, when resilience is less than 0, I would not be shorting the stocks. The stocks on their dips are starting too long. This is the whole point of the style analysis. It's telling you what's really going to happen, right? So res is less than 0. I wouldn't simultaneously long the index and short the stock. I wouldn't bet on a further stretch. I would bet on them collapsing. So the stocks are going to move up. Like the index is moving up higher and the stocks are depressing. And if the stocks move up, they're going to move up faster. They're going to move up faster to connect to the index. It's slightly moving up slower. Then eventually if the stocks win the fight, they're going to jump up. If the index loses the fight, it's going to pop down. That's kind of how you look at it. Okay. DD above 6 is more likely to reach the bottom of the bull zone than return. Yeah, so like I said, it's a cautious tail today. If I were to pick anything to do, I would have longed a bunch of stocks watching the index break off. So, like, I would pick a basket of stocks at S&P at monthly hedge pressure day, and then long the stocks like Google, Visa. I'd be buying Google, Visa, Tesla. Pick from your lot of all the ones at the bottom of the box. So if I wanted to, and you see how when I said rapidly catch up and there's these rapid candles on Google, like I love this as a good stream of example of kind of knowing your craft, right? This is like the third time I drew something and you're seeing that happen, like in the middle of me saying it. It's just commonalities that happen on a daily basis in the market. Now, it's cautioned along the index here, but I said I would have not shorted the stock and said I would have longed it. And so let's see if Visa's got some green candles coming up. See if it's starting to move. It's not as violent as the Google one was, but it's, see how that red candle quickly turned green. What else is on the list? Understanding that there's mechanical things that are mechanical just means, you know, it's following a logic plan, and it's going to be repeatable, which is what makes mechanical stuff nice. Something attracts something else is going to always be tracking it. So it makes it more probable when you're trading. Anything else that's big? Intel. Oh, sorry. Resilience outside the box matters. It only matters on my trading what I do at the edge of the box. Like resilience being positive or negative. Like again, right now, just because resilience is negative doesn't mean I'm going to short. It just means it's possible this could fall to there. So if I am long, I want a long closer to here. If you bounce off of the top of the box and res is positive, then I would long. Now, the reason that it's negative while the S&P is still trickling higher is the irrationality from the DD band tap. This is what we always talk about. The minute you have what's called a float failure, which is where you tap the opposite edge of the DD band that's supposed to, bullish market does not want to touch the bottom band. If it does, then what we talk about in our videos, anytime you have float failure, these are going to detach from what's happening. You're going to see that crazy activity. We talk about this all the time. So what we normally do is, while resilience is predictable of what's happening between the SPY and like the index components itself, is that the actionability is deceased, is dead. So while you bounced off of the box and this was negative, it cautioned me just to kind of like not want to be long the market. But look at this, it bounced with negative res. You don't expect that to happen. That's irrational. But when you hit that DD band bottom, when that's bullish, it's already telling you that things are going to detach. So that's kind of what like float failure tells you. The market has detached. The index is traded too far south, and now things are like doing this to catch up. It's kind of like, the way to describe it is that you're driving on an icy road and you start to skid, and then you turn faster and turn faster and faster, and then you bank and crash your car because you're like correcting and then overcorrecting and overcorrecting. And that's kind of what's happening here. The market has traded too low for comfort, and then now it's going to detach a little bit. So your pivoting action is going to be backwards sometimes. It's random. So when you know you have that float failure, which is one of their techniques as well, I'm not trading. When this falls here, I'm not saying, ooh, resilience is negative, let me short it. That's why I'm not shorting, because the action stays random anyways, right? So the action, meaning off of the pivot. So while resilience is telling you like what's going on in the box, an example is here. When it falls to the box, you expect it to bounce with it being greater than 0. But it also bounced while it was less than 0. But we expected that because float failure happened. So when you have any of your irrational signals happening, the pivoting action can be backwards. And so we don't use the pivoting action to take a trade, which is why I'm not in a trade. Does that make sense? We just know when it's irrational, I just don't spend a lot of time trading off of my signals. I want things to line up. The float failure is that when, let's read what the little thing we wrote says. DD bands map out an area of control for futures themselves. Okay, so this is looking at futures, and control is lost when the DD bands break. When the DD ratio is bullish, so the DD ratio is based on the stocks. So DD is connecting stocks and the futures together, another type of arbitrage, right? Stocks move up and down, the index moves up and down, the futures trade to match the index, but the futures can also trade away from the index and then eventually snap back in. This is exploiting that process. So while resilience is looking at the stocks and the index that it's made of, and the index ETF, DD and DD ratio are looking at the futures and the index and how they detach. So all of our tools are looking at clues that actually matter. Like you're looking for clues in futures, stocks, options, everything. So in this particular effect, the futures traded lower when the stocks themselves have a natural bullish pressure. So in the overnight, futures, like float is where it does not want to connect with this bottom band. And even if you just touch it once, there's a huge thing that happens here. And you'll see a volume spike every time you touch that band. And like you can see how that band is a pivot right here. The idea that it's trying to float off of it, like, you know, not touch it. And then finally, when you touch it here, it's telling you that there's enough selling pressure on the index to detach it from the expected opening value of the stocks. So like additional overnight pressure, whether it's a news event in this case, or whether it's, you know, other markets selling off, it's saying that our futures are trading further away than stocks anticipated from yesterday's close. So when there's a separation of the two, the futures and stocks are going to be wobbling around as well. And float failure tells you that. So float failure is when it does the opposite of what it's supposed to do. Float means it's not supposed to sell lower than that band. And if it absolutely touches it, then throw everything out. Your day is going to behave randomly. And we teach that in the float failure ability. We say the minute this happens, the market's random. And so therefore your pivots are randomly going to do the opposite things sometimes. And therefore I'm not trading that bounce over here. I didn't long. Why didn't you long? Well, our pivots could be backwards. And every pivot and every indicator you can ever use could be backwards. So once your trading is, your strategy has changed to be essentially random in a 50-50, then you're just coin flipping. And how did I maintain a 75-day win streak is not to trade when I can identify that the market is moving in a coin flip. Now, what we did say was that if the index continues to trade higher, the stocks are going to rapidly move higher. So like an example, I would find stocks like INTC and say, it's trading lower. Oof, let me reset my platform really quick and close down some tabs. I got like 6 million tabs open right now. I think I'm using all my RAM, or my CPU, something. Let me refresh. Maybe let's make sure my computer's not overheating. Give me 1 second, guys. It's only made like $200 today, but I'm okay with that. I need to get this money into my Robin's account when they get that open. Hopefully today. Sorry about that. Let's close down some tabs. Way too many things open right now. Just a little bit better. Okay. So we're likely to see some stocks moving higher. Let's look at Visa again. When I talked about that this morning, is Visa going to likely? Okay, an example is like, where's the S&P? We'll check Qs really quick. QQQ on hedge break. Okay. SPY. Okay. Clean this up a little bit. So, like, I would not be trying to short the stocks long in the index, as you can see right there. I would long the stocks and short the index on an arbitrage trade. The index is moving higher, and if the stocks are moving higher, the stocks will move higher faster than the S&P is moving higher with res negative. Now res popped positive. So now this is telling me is that the stocks are now going to rapidly catch up. This is now an opportunity to catch stocks that are lagging behind the index. So like stocks like Intel would have likely bottomed out at this point. Amazon's, like, this would be a great time for me to want to long an Amazon. If the index is starting to show signs of life and res is popping higher, it means there are stocks that are starting to break to the other side. So when they stretch like that, we know markets can be random anyways. There's no real repeatability in your actionability. So I try to avoid times when I know my indicators can be a coin flip. Do we all understand this whole coin flip mentality? Make sure we're all on the same page. When weird stuff happens, you just know your indicators aren't going to be as strong at reading the market. So one of our major concerns is that float failure. It's a big part of our strategy. Futures can give a lot of information very quickly. So, yep. Be cool. All right, you guys, I know I have a lot of meetings and things I got to do today, so let's go ahead and call the stream. I don't think I'm doing any more trades. Kind of sit out on this one. We love you guys, and we will we'll see y'all tomorrow, Monday. $200, small profit. Don't forget, if you guys want to check out our courses or the platform itself, we have a really awesome extended trial. You can do a trial. Check it out for 3 months. Learn all of these techniques. Great set of tools to add to your repertoire. Very strong at what they do. Very specific in when they're used. Different than regular technical analysis. And we're glad to have created something that's a little bit different. And it's something you're interested in. We'd love to share further with you. So come check it out. Go to the Discord down below. Send us a message. We'll give you more information. I love y'all. Small one, $200, nothing crazy. But yeah. Be careful today. Not a lot to take off of today's action, so. All right, we'll see y'all tomorrow. See y'all Monday.